Hello everyone, super exciting video today that I'm going to be getting into. So I'm going to be sharing with you all my strategy and how I've been able to make six figures at 20 years old with day trading. Again, if this video lands on your page and you do not know who I am, my name is Sophia. I am an options day trader, so I do not trade futures, and this strategy will not be applicable to futures or Forex or any of that sort. So I mainly just trade options, and I will show you guys my portfolio. I don't have a problem doing that, that I day trade with. Just so you guys can know, I'm legit. I'm 20 years old, and I've been trading options since I was 15. So, just to get into it now, my main strategy that I use for day trading options is extremely basic, and it is something that anyone can learn and understand. So, what I use is something called support and resistance, and I use supply and demand zones. So we will start to get into that. And if you don't know the basics of options or the basics of either of these concepts, please watch prior videos where I talk about that. So, anyways, how do they work together and why do I use them together? So, just to give you guys a very basic understanding, support and resistance levels are price levels where price has reacted to a specific point in time multiple times. So, either one, we are going to reject a specific price, so that will be called our resistance, or we are going to get a bounce, and that would be our support level. So you would see this happen multiple times, and I take and draw out these levels on normally the 30-minute, the 1 hour, the 4 hour, and the daily time frames. So pretty basic, pretty easy to understand, and I will obviously show you guys visuals shortly. So supply and demand, these are zones that show where big buy or sell imbalances happened, usually leading to sharp moves. So zones where big buyers, which is demand, or sellers, which is supply, stepped in hard. So now you can use the two simultaneously with confluence together to decide what you are going to be day trading and what trades you're going to be taking. So just to get into it some more, why would we use both together? So when you combine support resistance with supply demand zones, you will get higher probability entries, and my strategy is mainly focusing on having a higher win rate versus trying to get those options plays that are 100 to 500% every day. First of all, I don't know if anyone's told you, but that is unrealistic and that is not going to happen every single day. It is going to be pretty difficult for you to hit those over 100% options plays. It is 1000% possible to do. But if you actually want to become a day trader, you need to focus on having a higher win rate and higher probability setups and entries. As of right now, within my callouts to my community, I have a 90% win rate, around an 85 to 90% win rate each week with callouts. So that is my main focus. Do I make a lot of percent on my options plays? Not really. I will usually make anywhere between 20 to 70, 80% on each trade that I take, just depending on what type of trade it is and the moves that we got that specific day. So just to get back into it, I combined support and resistance levels with supply demand zones to get higher probability entries, tight stop loss placements, and stacking my confluences and having higher confidence in what I'm taking and entering. So, for example, your demand zone would be correlating with your previous support. And if we continuously bounce off that support level and then get a break of the demand zone, that is a very, very strong, high probability setup to take calls, to go long, whatever you want to call it. If we have a supply zone and a previous resistance level, and we keep rejecting that resistance level, and then we get a break from our supply zone, that is a really strong short setup. you can take calls off that. So let's get into it. So I have this really great example. So this is taken on the 1 hour. And the next slide, I will show you guys where exactly you would actually be entering this trade from. But just to show you how everything's marked out. So from 518 to 521, we are sitting in a very strong supply zone. Do you see how price is not breaking out from either side? So we have a resistance level at that 521 area, and then we have a very strong support level at that 518.46 level. And again, this is taken from the 1 hour time frame on QQQ. Let me move my head. So, yeah, as we see here, strong support level at that 518 area, and we are currently trading within, if you take out this area, this blue box is currently trading within that supply zone. So what we would be waiting for exactly is for us to see a break out of this supply zone and break that support level for extra confirmation. Could you take the trade as soon as we break out of the supply zone and get a hold below? Not exactly, because in this specific example, we kind of get a support level right outside of that supply zone. So this is kind of my picture perfect example. Is it always going to look like this? No. But this is how you will be finding your high probability setups. And I feel like this is weird. Anyways, back to it. So as we see here, we break out of this supply zone and also break that support level that we are getting. In this picture, it doesn't look like we made a big move or really moved anywhere. But once I zoom in and go to the 5-minute time frame, you will see that this was actually a $6 move down. And on Qs, if you trade options already and you know what I'm talking about, that's a really large move down, especially if you're holding some zero-dated puts. So let's move on to the next. This would be our exact entry on the 5-minute time frame. So just showing you, we have this supply area right here. We start to get a break out of this supply area that we've been chopping in between. And we would wait for a break of support and get our entry right here after that 5-minute candle close below support. So I do want to see our candle close below support to be taking entry, to have conviction that we are going to get a continuation down. Now you may be saying, why couldn't we have just taken the trade as soon as we broke here? You could have, but that wasn't a strong entry and we didn't have a strong support level at that area. So if you did, price could have easily reversed on you and you would have been stopped out, which isn't fun. So again, your ideal entry, you want to have it on the 5-minute time frame. I know a lot of traders that use the 1-minute time frames. When you're trading options and trading more individual names versus, someone who trades futures, I really do not recommend looking at the 1-minute time frame at all. It'll kind of mess you up. Again, futures traders, I'm not really talking about you guys. But yeah, so that is kind of my exact entry trigger for a trade setup. And I'm going to then take you guys into a real trade that I've taken and show you guys exactly what I mean by this in real time. But just to finish off, takeaway from my example, why is it high probability? Because we have extra confluences. We have a supply zone and a support level breaking at once. So we have very clean structure. Price respected the levels before breaking. We were chopped around in that zone. And once we broke out, we had very strong momentum and volume. Fast $6 drop from 518 to 512. So this kind of move, again, is ideal if you're trading those zero-dated contracts or short-dated options. And our key lesson and key takeaway from this is combining supply zone rejection with a support level break increases your edge dramatically. It gives you a tight risk level above supply and a high risk to reward setup. So, final takeaways. Support resistance equals price memory. key horizontal levels where price has reacted before. Use them to define entries, exits, and stop loss zones. That is, all within the strategy, which is really awesome. Again, I'll take you guys through an exact trade. We also have zones of imbalance that cause sharp price movements. Helps you anticipate big reactions before they happen. Again, we don't guess using this though. We're not trying to predict. But once we do get a breakout of those key levels, we can already tell where price wants to go. So when support and resistance lines up with supply and demand zone, you get very high probability setups. And I kind of gave you all a playbook here. So what you want to do is find your supply and demand zones on higher time frames like the 1 hour, 4 hour, daily, and also find your support and resistance levels on those time frames as well. The 30-minute can be used, but I would mainly just use that solely for intraday trades, finding those smaller levels, maybe even scalp trades. And what you want to do is wait for a reaction and confirmation, so that retest, rejection, structure shift, and execute with tight risk and clear targets. You don't want to just be blindly entering a trade because you think we're going to break out of a zone or a level, or you think we are going to get a bounce at a key level or a rejection at a key level. You can't think, you have to have confirmation, and that's why I'm giving this to you guys. So trade smart, wait for the reaction, let the zone prove itself before you enter. So I hope this all was helpful. I'm going to take you guys through a trade that I took and show you guys exactly how I use this in real time. Okay, so for this example, I'm taking you guys way back to the daily time frame on QQQ because we do have a pretty strong level around this 3250 area that we saw in the past, and you can also drop down into the 1 hour, but it requires you scrolling all the way back because the specific charting platform that I use, you are not able to use the little calendar and go back to a date where you want. So I basically picked out this level way pre-market because I already knew, we have a very specific level at this 3260 area, and I've seen it before. So I had that marked out, and let's go all the way back to present time on Qs, and I will just quickly mark it for you all. So let's go back to, let me go on the 5-minute time frame. So again, I had a key level marked out, and I'm going to show you guys right here. I had a key level marked out around this 32 area right here. And we also were trading within this supply zone up here. We did break out of this level. This was my resistance level, and we did get a break out of it. But why was I not looking to go long if we got a break out of one of my levels? First of all, there was zero momentum. We may have had a long entry after we got a break, but why would I be taking a long, especially after we already have rallied $5 or $6 from pre-market? Not even pre-market. We have already rallied $5 or $6 from near market open. Why would I be looking to go long when we are already so overbought? That is something else you guys have to take into account, and I don't know how else to really teach something like that besides tell you guys you need market experience. That's just not a trade I would have taken. And we also, maybe I would have taken it down here to see up to that resistance level, but just because we're breaking it doesn't mean that it is a good trade to be taking. So anyways, we did break out of that resistance level, but we were also holding up a specific supply area, and that is not the one I meant to draw. So we were holding up the specific supply area right here as well. So I was waiting to see either, us maybe trade around this area, whatnot, for the rest of the day. We already got some pretty big moves, but I ended up taking this trade because we were in this supply zone we did end up breaking out of it, and we broke my initial resistance level that had turned into support within those 30 minutes or so. So I was waiting for that to be broken again and for price to disrespect that area. And what did we get? I obviously took profit around this 526 area, 527, because when I'm trading Qs, I'm normally taking zero dated contracts. So that is kind of what I was watching and looking for. So we did get a pretty nice move down all the way from there to there. If I could, I can't color it, I guess. But yeah. So that is exactly a trade that I would have taken from today. And that's like a real live setup of it. I do want to show you guys a opposite setup where actually this almost looks great to me. So I'm going to show you guys an opposite setup of where we have a demand zone and we are breaking out of it and getting a bounce on that support level. So I actually did have a pretty key support level around this 528 area. So price did not exactly really break and hold below it. And this is another example of when price breaks below my level, but not at a rate where I would want to be taking entry, right? So this one's a little tough because we did have some news. We were wicking around and whatnot. But this isn't a trade that I took, but this is an example of seeing a demand zone and seeing us get a break or a bounce from that specific level. So all through here, we're kind of sitting in our demand zone down here, waiting to kind of get a break out of it. So we tap into support. We don't really, we kind of hold below it, but with not nearly enough momentum to actually, make us continue. I mean, these are bullish candles right here. So, of course, obviously, we ended up, bouncing off this support level. Again, a little bit of a tougher trade because we did get this massive wick into it for news reasons, and then we just kind of continued up. But a bounce on this level is a clear indicator that I would be entering that trade, and then I would also have been entering it as soon as we saw higher highs and out of this demand zone. So again, normally pretty easy. I mean, nothing real crazy to this strategy, just to kind of help you guys out and get an understanding of why I trade and what exactly I do. But I really love helping you all, and I really want to see everyone succeed. So if you like this video, let me know. If you guys want to see more of it, please let me know. But anyways, thank you all so much for listening to me and watching me, and I will see you all later.